Good morning, dear students. Welcome to the home mentoring session of accountancy. Myself, C.S.K. Khanna from the SD Vidya School, Ambala, Kent. Dear students, in our last class, we had learned how to calculate cash flow from the various types of the activities, operating activities, investing activities, and financing activities. And we had also learned how to solve the numerical relating to the preparation of cash flow statement while calculating cash flow from the different type of the activities. In today's class, we will learn how to prepare the cash flow statement when some additional information is given. Dear students, in the examination, you may be asked to solve or prepare a cash flow statement where some additional information is given, and that additional information may be given relating to the provision for taxation, proposed dividend, relating to the depreciation on any non-current asset, relating to the sale and purchase of any non-current asset, payment of the interest, payment of the dividend. So let's learn all these informations and how they are being treated while preparing the cash flow statement. First of all, we will discuss about a very important activity or very important information which is relating to provision for income tax. Dear students, please understand any information which is given as an additional information, which means that it must have the at least two places effect, because as it is not still recorded in the books of account, so it will affect at least to two accounts and to be shown at least at two places. So first item is relating to provision for income tax or proposed income tax. Dear students, relating to the provision for income tax or proposed income tax, what you have to do, practically you have been given the amount for provision for income tax for base year as well as for the current year. Now, provision for income tax appearing on the liability side of the previous year's balance sheet will be assumed at that we had paid that amount of the tax during the current year. If we have been given the previous year or the previous year provision for income tax or amount of provision for income tax in the last year of the balance sheet, it will be assumed that that amount has been paid during the current year as payment of income tax, and it will be deducted from cash from operating activities while you calculate cash from operations. Last year's payment of income tax will be deducted while calculating cash from operating activities. Now, if provision for income tax appear on the liability side of the current year balance sheet, that will be added back to profits, because net profit before taxation is to be shown under the heading cash flow from operating activities. So current year total provision will be added back to the profit before taxation while calculating cash from operating activities. The basic idea is there that whatever the current year total provision is given, that must be added back to the cash flow before profit before taxation for calculating cash from operating activities, and last year total provision must be deducted from the same heading, that is from cash from operating activities. If there is any additional information is given regarding this, you have to prepare a separate account to find out the missing information. What missing information will be there? That you have to understand that whether the payment of the tax is there or the provision of the income tax is there. Now relating to the proposed dividend or provision for dividend, proposed dividend or provision for dividend if appearing on the liability side of the previous year balance sheet must have been paid during the year, and it will be shown as a payment under the heading cash flow from financing activity. Likewise, I told you that the provision for income tax of the last year will be shown practically where? From deduction while calculating cash from operating activities, but the payment of the proposed dividend which is shown in the previous year balance sheet will be deducted from cash flow from financing activity. Likewise, if proposed dividend is appearing on the liability side of the current year's balance sheet, it will be added back to profits under the heading cash flow from operating activities. So what is the difference between the treatment of provision for taxation and for the proposed provision for dividend? The provision for taxations, both items, that is current year, will be added back while calculating cash from operating activities, and the last year provision will be shown at deduction in the same heading of the cash flow from operating activities. While in case of the provision for dividend or proposed dividend, current year total provision for proposed dividend will be added back while calculating cash from operating activities, but last year total provision will be shown as a subtraction while calculating cash from the financing activity. So this way we will treat these two items. Once again, keep in mind that if some additional information is given relating to this, apart from the information given in the balance sheet, you have to prepare a separate account and you have to find out the missing information and its accounting treatment. In my next video, I will continue to the accounting treatment of the additional information relating to purchase or sale of any non-current asset, as well as the provision for depreciation.